Good morning, video morning brief for the U.S. stock market, Monday, March 31st, 7:55 a.m. Eastern Time. I'm Rich Paz for Critical Point. Let's begin with the 60-minute chart here, and basically overnight the market is off 50-some points, and the futures market had a really bad day on Friday. They followed through on selling. So it looks as though the S&P 500 cash will open up down near the 55, 54 gap area I've been talking about. It probably will be lower than that even. But this could be a bit of an exhaustion here for a larger level 3 trend, okay? So could find some support there and bottom. All right, let's go to the 6-hour chart and then give you a quick snapshot for those of you who have to run. Okay, what we have is the market is clearly in a level 3 downtrend. Level 3 downtrend and uptrends occur basically about once a month. You can get into two bottoms or buy signals with a sell in between. You can also flip that around, two sells with a buy in between. But generally we assume, I call it a once a month buy sell kind of thing for the stock market and many liquid markets, very developed markets. It's how supply and demand works. It's how we do business on a monthly to intra-month basis. All right. Now, inside the level 3 is a series of level 4s, and I'm showing the actual business cycle pattern. Sometimes they don't work the way we would like. They run about 70 or 80% accurate. There's another one. There's another one. This is getting into a sequence when the stock market should bottom today, tomorrow for level 4. Level 4s are intra-week pops and drops, but sometimes in one direction, it only lasts during the day. It's an intraday move, but the most important intraday move normally, okay? But it can build up into a few days and the bigger moves during a week, okay? Now, what we have is the model saying maybe the level 3 doesn't bottom to the end of this week for the latest allowed, but it ought to bottom no later than Thursday, and ideally a bottom sooner rather than later this week. April 2nd, we have the Liberation Day with Trump's tariffs here, and this is why the market is crashing and burning. It's scared that this is going to cause more and more problems off of the automobile tariffs, that is causing more and more problems with Canada, Mexico, China, Europe, okay? Things are just falling apart economy-wise, all right? So a level 3 bottom sometime this week, assume earlier rather than later, but the level 4 is due to bottom today, tomorrow, and it's actually preferred to bottom today. I think we probably will see the market pick its head up tomorrow at least, but maybe it's late tomorrow. Maybe it starts to pick up by the end of the day. We don't know yet. If I see that it's important enough for you, I'll let you know. But ideally what this market's going to do is, and this is the futures, by the way, 6-hour chart, it should bounce into next week for a level 3 trend. So it's going to be a level 3 buy sometime this week, maybe as soon as today, but I can't pick the day as of this morning, okay? It's just not there. But we're really stretching the rubber band by some measurements here that it is more than ideal conditions met to bottom this out. And this indicator is quite oversold. It may be too oversold where it's one of those weird things that the market bounces a little, the indicator bounces, then the market goes lower still, but the indicator does not, and it provides inharmonious price action. It provides a positive divergence. It just increases the odds for a better bottom, okay? And just takes time. The indicator has to bottom ahead of the market, actually, with that kind of scenario. But sometimes the indicators will bottom right with the bottom, and we just don't know. I'm not that concerned about the indicator. To me, I'm just saying it's oversold. It's saying it ought to be cheap enough. Somebody ought to want to buy this. They're getting it near the prior low, okay? Now, so your level 4 picture is look for a turnaround today. It'll probably be higher tomorrow, but things could slide out into tomorrow, then up, okay? Your level 3 picture is it's going to bottom anytime this week and should bottom sooner rather than later and can bottom today. It ought to be higher next week for that level 3 move. Now let's zoom out to even larger moves that I'll discuss more on the weekly chart, but also daily. But I think this is the true level 2 bottom now. If it doesn't trade below that low on March 13th, or that week, I should say, the low of that week for all the indexes, then this may still be the level 2, and this was just almost complete retracement and doesn't really matter which it is, I suppose, for now. But I'm calling that we're looking for a level 2 bottom as well. For those of you who really think the market has overreacted and you think all the Trump stuff's all going to work out and be great and wonderful someday, okay, this might be a nice buy for a nice rally for the latter half of April on into early March, okay, or early May. But I'm concerned this level 2 rally is not going to work. It's going to be broken up. I think traders will sell every single level 3 rally the rest of this month into next month. I think they're going to distort it. I think this market just wants to keep going lower into May, June, July for a more important bottom called level 1. All right, so let me give you some news. This quarter of this year is the worst quarterly performance in 23 years. Oh, hello, Mr. Trump, President Trump. Okay. Now, the consumer sentiment readings suggest consumers believe inflation is going above 4% someday. They don't have a good track record of being accurate, but it's bothering the stock market right now. All right. The bond market thinks interest rates will be a little over 3%. Okay. That's suggesting they have more fears of a recession more than they have fears of inflation, because they also realize we can have a recession with inflation, but that could then get so bad that then the inflation just crashes too. They're trying to help out here, keep business rolling, try to hang the economy in there. And we also, though, have a flight to quality or safety of people pulling money out of the stock market, putting it into the bond market. And the bond market can't quite handle it if it wanted higher interest rates because of higher inflation. It's now seeing that it has to bring those interest rates down. We're also seeing discussion of John Authers in his Bloomberg daily email this morning was saying that he was pointing out some of these very same things, but also he said the China stimulus does not seem to be working. That's causing some worries, even though last week some big bank firms like Goldman Sachs, Morgan, JP Morgan, some of those, all of them, were basically pointing to this might actually be a good time to be buying China. I think Wall Street is really worried that the U.S. stock market is not going to perform well for a long time. Even if it bottomed today, it's just not going up much. And they're wondering, well, where do they get the next commission? Where do they get their next fee? Where do they get the next opportunity? Because most people want to be bullish. They want to buy things. They don't want to sell things. So they're worried about their business. So I think they're going to start advertising. You better buy Europe. You better buy South America. You better buy Asia. You better buy the world. Don't buy the U.S. And yet they'll then try to find individual stocks and say, why, yes, buy the U.S. as well. But they're nervous. People won't believe them, and they're not going to buy the overall U.S. stock market. Think about that for a moment. All right, next up is Paul Krugman. You may not care for him as an economist, but he does some pretty interesting work here. He has an article, I haven't read it as of yet, but I just noticed it this morning, but he was just saying Maga is bad for business. I believe it wholeheartedly, okay? And then, of course, we have the April 2nd liberation of these tariffs and the ongoing Trump saga and the American saga. We're a mentally, physically ill people. We're destructing ourselves. We got a 200-year pattern since the launch of the U.S. That basically means we're in winter death phase. We're supposed to die and go away. Well, because it is a cyclical pattern, however, it suggests we'll hang in there and be reborn. But the question is, what will we be reborn to? I view the MAGA stuff as putting an end to something and then opening our minds for something different. But I don't think MAGA stuff is the something different. We need someone else, okay? We need another plan here moving forward. And they really don't have a future forward plan, in my opinion. All right, the market is looking at all those things. Whether you agree with it or not, the market is actually looking at those things and trading those things. And it looks ugly. It looks bad. All right, let's move on to the interest rates here. This one threw a curveball to me. I got to do some work here. This should not have been a level 3 top. So this was a shock to the bond market. And the bond market, in theory, knows more about the economy than the stock market. Something overnight shook them up. They don't know what to do. The dollar's really not doing much, though, relative to interest rates. It's reevaluating, thinking about things here, what to do. Gold is just screaming higher. So you know people are thinking the central banks are just going to keep buying gold, but they're also worried about where we're going with the world and the U.S. self-destructing and the tariffs. They just want gold, lots and lots of gold. They can't get enough. off. All right, the NASDAQ versus the S&P 500 ratio, I said I wanted it down this week. There it is. I was getting nervous it wouldn't. So in other words, the NASDAQ is the weaker. I think it will remain the weaker in general all the way into May, June, July. Okay. And then the Russell 2000 versus S&P 500 is not really doing much of anything. That's because that index, I think, had already been beaten up ahead of time here. I guess I don't have anything on that list. Crude oil is probably going to turn down. I got to shut that off. All right, that's a reminder. I got to wrap this up. Okay, daily index on the S&P 500. Down off the 200-day average, going much lower, probably going to a new low for the year. Dow Jones Industrial, same story, back below the 200-day average, probably going to be ugly today. NASDAQ 100 futures, there it is, and it's taken out the low, new low for the year. It's ugly, but we're looking for a level 3 bottom. It'll be higher next week, maybe following week into a level 3. But how well will it rally? That is a problem because I'm nervous. This market might want to crash and burn like 1987 and go down to 4,100 and the S&P 500 or something like that. It may crash and burn like COVID 2020, okay? We may have miniature crash and burn like the late 1990s Y2K and the dot-com blowout. We may have a real miniature crashing moment as much as 60% down this year relative to a 1929 kind of crash thing. There's lots of things that can go wrong and make it far more serious, but my guess is the worst downside this year is probably 20%, and I would like 13% or more in the S&P 500 due to an LT2 mid-size sell signal I threw in, but I've always warned you I don't particularly care for it. I don't know how accurate I'll be with it, but I'm throwing it in. But boy, it looks like this morning we're working on that minus 13%. Here's the daily chart of the S&P 500 futures. Beautiful level 3 business cycle pattern. There's the uptrend, downtrend. It does have a right translation, meaning there's a chance the market is trying to be more stable for the rest of this month. And maybe it's even in a much larger bull move, but it's just too volatile, crazy right now to really bet on that. I think it's going to bottom somewheres in this line, somewheres this week. Give me an up day this week, a nice good close, not a tiny up close. And I think we've got a level 3 bottom and probably a level 2 bottom. Give me an up week anytime this month. I think we got a level 2 bottom. The market should be higher next week. All right, let's move on to the weekly chart. And what I'm going to do is the breadth of the market was supposed to turn back to being ugly. It did. It's working for me. Okay. That's as of this morning, I believe. Or maybe, no, I guess that was last week. All right. Next, we want to look at the S&P 500 equal weighted index, another indication of breadth. They're selling across the board. It needs to pull down some more here this week, next few weeks for level 2. Keep in mind, this can be down even into early May, but it's probably going to bottom first half April is the best guess here. All right, so it should be coming up here, and then it should rally a little later here in April is the best forecast. But how well it'll rally, it's all becoming quite questionable. Here's the Dow Jones weekly cash, went into my price target, old downside target, and I said it's probably an upside target now. Filled that gap. That all worked for me. Negative week reversal. That worked for me. It's coming down. The model's working okay here. I'm personally on my own money not keeping up. I keep jumping out too much and just don't make enough money on the downside here. I'm worried too much about my own money and my goals of how I want to make extra money to spend this year, especially if the country really does fall apart. And that's interfering with my actual trading of just following the model and just seeing, in other words, it's reducing my profitability. That's my own personal fault. It has, and money management, risk management, it's not, and my goals, that has nothing to do with this model analysis working quite well. This is the futures market for the S&P 500. A little bit of the gap there this starting of the week, probably is meaningless information. Eventually, it should bounce up in level 2, come down to level 1. We can get a better picture of that, however, going to the S&P 500 cash, even though it's a more cluttered up chart with more analysis. At any rate, there it is. Okay, mid-size and minor long-term business cycle top. We're in a bear market in the May, June, July. We may be in a bear market to October. We may be in a bear market early next year, but that seems very, very low probability. I'm still sticking with the idea this will be over by October. I'm warning you. This may take a bit longer too. All right, inside of that, there should be these level 2, level 1 moves. The level 1 move, the most important during a year, normally the longest, but sometimes just as short as a level 2. The level 1's more like semi-annual business. The level 2 more like quarterly business. But boy, sometimes a move in one direction can last just a month or less for these things. Okay. Any rate, it bounced up to my estimated fair value. They sold it off. It bounced briefly above the 5-week average. They sold it off. It's coming down to test the low of the year. Well, we already know it's probably going to a new low this month. This week. At any rate, very oversold here, though. Very narrow spread. It should turn up, give a buy signal. The market ought to bottom sometime now to maybe the week of April 14th. The latest, I would prefer no later than the next week. Bottom this week or next for level 3. Well, if we use the level 3 forecast, it's saying it should bottom this week, not next. Okay? So if it's not this week, it probably is going to be 2 weeks from now, 2 or 3 weeks from now. The longer it takes, the less upside we're going to get, pure and simple, all right? I'm concerned that what it should do is bottom now, bounce into a level 2 top the week of April 14th to the week of March 12th. I had thought it would bounce into the 5800s, but no higher than 59. I'm now concerned this level 2 is not going to work like prior years. It's going to be the lower probability, lower performance. It's going to not be a strong rally. I don't think it's going back to 5786.95. Even if it does go above it, it would probably be an immediate sale in my opinion. But my guess is they're just going to bounce it back some. I think this level 2 is going to be crippled. It's not going to work well. Why? Because it wants to go from a level 1 from that start of that long-term bear market. It wants to be in a level 1 all the way to May, June, July. This wants to go lower and lower. How low? Well, we have 5470 that I've wanted for some time. We have 5347 that I haven't had as quite as long, but I really like it better. We also have overall range of 5,400 to 5,100. So this can get ugly. It can take it back to last year when it bottomed in August off that Japan carry trade blowout. And we got to keep an eye on Japan. And Japan is now, they were saying they're going to invest money in the U.S. I think they're still going to do it, but they're now going to talk about even tariffs against the U.S. They're going to start fighting the U.S. Trump is literally making the entire world an enemy of the U.S. How do you like that, Mr. and Mrs. America? Oh, aren't you proud and wonderful? Okay, this can be really crash and burning. It could just have, down 60% by May, June, July. It can be down 30% by May, June, July. It can be down 20% by May, June, July. We may learn it doesn't even go down 20%, but I'm thinking it needs to go down at least 13%. It can crash and burn. Nevertheless, it is due to pick its head up for a level 2, but I'm not so sure it's worth trading. I think what the market's saying, it's going to sell every level 3 bounce and just keep on selling into May, June, July. Hear it, weep, whatever. Okay, enjoy it. Make something out if you can. Have a great week. Past results are not necessarily indicative of future results. I hope to have some announcements on my new website. It is up at criticalpointpod.com. And I have some new announcements on subscriptions, but I need to double check to make sure one of those subscriptions actually is working. But we got some announcements coming this week. Thank you very much.